The idea is to buy low, sell high.
Hmm.
So if you bought silver at 100 plus because some guru on YouTube said it was going to 400, that's not buying low, right? You're like twice, all time highs, previous all time highs, at least nominally, right? You can argue, oh well, it should go to 400 or 200 plus would be the CPI adjusted all time high. Sure, logically, again, the macro case can be right, but it doesn't tell you what will happen next. Uh, Silver over 100 when the previous peaks were 50 is not a buy low opportunity. I'm not anti silver. I'm not hating on silver. I'm just saying this is an objective
Yeah.
and reasonable thing that I'm saying. So, do I know where the market's going to peak? Did I know that, late January was going to be this big scare moment? No, I was saying that, buy low. At the Vancouver conference, just days before the correction started, my whole topic of my speech was buy low. I don't know where the top is. I'm excited. I'm long. I'm making a bunch of money here. Um, but nobody goes broke taking profits on the way up. And if you see opportunities to buy low, then cashing out some of your big wins to fund those will automatically rotate you into something else. So I didn't know what was going to happen, but just following that basic discipline, where's my opportunity to buy low? Just look for that and don't worry about whether it's the top or the bottom or any of that stuff, right? That would have protected you if you had acted on that, immediately before this correction, even if you didn't know the correction was coming.
According to Lobo Tiggre, gold's current uptrend looks structurally different from previous peaks and isn't broken yet. He warns that buying silver at $100 is not a buy low opportunity, stresses taking profits, staying liquid, and holding physical gold as the ultimate insurance against systemic collapse. Thanks for watching. Give a thumbs up and subscribe to Find Metals for the latest insights.
Well, believe it or not, I really like silver on this account. I can't call it a buy low opportunity, but over time, I think that, it just seems like if not every day, every week, they discover some new use for silver. And these data centers, they use like millions of ounces. It's not just a picogram of, tantalum or something in your iPhone screen. It is, it's kilotons of the stuff. So I just charted this in my most recent weekly edition, my macro letter, which is free, by the way. If you look at the big peak that we just saw and you compare it to the previous two peaks that we have in the entire time, big ones since gold has been freed to trade against the dollar in 1971, it doesn't look the same. It's visibly different. So it's the scary words in investing, it's different this time. Well, like, this is measurably different this time. The pattern does not correspond to what we've seen. And despite today's volatility, as you and I are recording, the current uptrend doesn't look broken yet. There's a big spike, but if you pull back and look at it, there's a spike on what looks like an uptrend. It hasn't rolled over in the way that it did after the previous peaks. So I'm not a technical guy, a chartist per se, but it is somewhat reassuring because you have these fundamental views, the debasement trade or central bank gold buying. And the problem with big macro calls like that is, even if you're right, it doesn't tell you what happens next, right? The markets can remain irrational longer than you can remain solvent, all that stuff. Sorry, a bit of a long-winded answer here. But what I'm saying is, for all the reasons that gold bulls were bullish, none of that's changed. And I'm definitely in that camp. But what's new in my mind is that as I'm saying, looking at these charts, you can see that this time is not yet looking like previous peaks. So I like it when the technicals align with the fundamentals, in my view. I've been looking for some time. Anything goes like a hockey stick. That can't, no price can go vertical forever, right? So there's no surprise. And I didn't get a lot of friends calling for some kind of correction before it happened. But now that it's happened, remember that my call wasn't, oh, this is the end of the market. My call was, I think we're headed for a period of consolidation and correction, like we saw at 3,000, like we saw at 2,000, before the next big move higher. So far, what's happening is, as disconcerting as it is, especially to the Johnny come latelys, it actually fits the pattern of what I was looking for. Even on an inflation adjusted basis, it's hard to argue that gold and silver are cheap, or even the PGMs or copper. It looks crazy lately at all-time highs, but those are nominal. It looks cheaper if you adjust it for inflation, but not really cheap. The one that looks cheapest to me of the commodities is really oil. Well, I mean, you could argue something like nickel or lithium or something, but those markets are much trickier. And especially in lithium, there's tons of lithium out there, and not just lithium, but like idle mines just waiting for higher prices to come back again. So for now, I really have a very simple answer. I think the oil patch has the best combination of being objectively low-ish.
Yeah.
And selectively, there are companies there that are not at all-time highs or 52-week highs, good companies that are available. I'm skeptical of the data center business itself. And I'm not the only one to articulate this. I think Michael Burry, the great short guy, big short guy, he's talked about how, these the latest Blackwell chip from NVIDIA, next year there'll be another one, right? The depreciation on these things is much faster. People say you build a data center and you're a landlord of a very rapidly depreciating asset.
Yeah.
And that kind of scares me, and the AI itself, nobody knows what the killer app is going to be. Like ChatGPT still says really stupid shit if you just don't ask the purpose. I mean, really. And the better models, I mean, we use them in our team to help us with our research. But I just tweeted about how, we use actual intelligence, not artificial intelligence, because it's not just the hallucinations. It just misses stuff. And it's just sometimes so gobsmackingly wrong.
Yeah.
And what makes it more dangerous is it's not just wrong, is it sounds so right. It lists you 27 sources and academic papers, and the phrasing is perfect. There's no stuttering, ums and ahs or grammatical mistakes. It sounds very erudite, but it's just completely wrong. The very least you should do is make sure that you have stacked significant bullion, not a month or two's expense, but like a couple years worth of your living expenses that you can access. You can hold it in your hand, even if all the cash registers, which are all digital and connected online, they all shut down. You go to the supermarket and there's no lights, there's nothing to run the cash registers. Who the heck has paper in their pocket anymore, right? Even if you did have some funny little bills, wouldn't you be worried about how much they'd be worth? Okay, they might work for a little while, but I do think in a worst case scenario, people will remember what real money is, and you will want some in your personal possession. But I think the overall lesson here is that skepticism pays over time. And that's not one myth or one thing, but like that is the cardinal virtue of the disciplined speculator, is discipline. And in our space, right, I deal with people all the time like, oh, what do you think about this company? They're going to double the resource this year. Like, well, how do you know that? Well, management said so. Well, of course they said so. Right? Right. So I'm not just throwing Justin Bieber under the bus here or whatever, but anytime you give into FOMO, anytime you go with the emotional wave, sure, you can buy high and sell higher if the greater fool comes along, but that's not the idea. That's not the tried and true thing that works time, over time, and not only makes you money, but helps you keep money, is buy low, sell high. You got to do both. You got to be skeptical. You got to be an independent speculator and look for opportunities to buy low. Don't forget the sell high part. Just keep doing that. And I think you'll outperform the herd. Well, if you look at oil, for example, and you adjust it for inflation, it's on the low end of its trading range, and it looks to be carving out a bottom. It's really the geopolitical situation that has prevented me from going more into the oil patch already. If that weren't the case, I just, looking at the market, I think there's reasonable arguments, Doomberg notwithstanding, that for the near term, and that oil actually objectively is cheap. Just real quick on the Doomberg thing, I'm not throwing him under the bus. I think he's probably right, but that's a 50-year macro thesis he's articulating. Again, it doesn't tell me that this year oil won't go higher. So I think to the degree that the AI scare now seems emotional in the marketplace, that's a very good thing. Because when Mr. Market overreacts, it creates opportunities. And that, I just made fun of how phenomenally wrong the AIs can be, but they are useful. We do use it to supplement, to amplify the human intelligence that we use. And it saves us tons of time. And if I write a query like, what the heck just happened to all the silver miners in Mexico?
Yeah.
And it spends 5 minutes generating an answer for me. That is a huge amount of compute because it doesn't understand anything. It reads the entire internet and bubbles it down to that is such an inefficient way to answer questions. Like I think the human brain uses something like 12 watts of power, and these things use gigawatts of power. I don't know, just to answer one question, but it's clearly not doing things the way we do them.
Yeah.
That inefficiency, I don't know if there is a problem. Like we don't know what consciousness is. How the heck can we get a program something that philosophers have been debating for thousands of years and nobody really understands, right? So the stuff that's necessary here, I think it's not going away. If we have better AI, we'll just use more of it. And yes, despite me making fun of it, it does actually help. And people are going to use more and more of this. Like, people are all upset now. Oh, these data centers, they're charging up our electricity bills. Why are data centers more important than me being able to afford my electric bill? Well, yeah, but you're using your phone to search for your favorite song or all like you're using this thing that you're complaining about driving up your electricity bill. So at the end of the day, the product is as crippled as it is still, as crappy as it is still, it's already valuable. And people are just using more and more of this. So I don't think the AI thing is going away. I think it's real, even if it's not actual intelligence. It's real, it's valuable. We're going to use more and more and more of it. And that's extremely bullish for all the critical minerals that are necessary to make that happen. There's just no other way. You can't recycle twice as much copper as exists in the world. I mean, above ground purified. You can't recycle that into existence. You've got to mine more of it. Independent speculator means a couple things. One is I'm not for sale, right? There is no amount of money a company can give me to earn a positive rating when they deserve a negative one. And I think something like 90% of the 1,000 or so companies we cover have a thumbs down or a claws down, as the case may be for a wolf. So we are independent. But it's also, the idea is like, we used to say, if you read a Victorian novel or something, a man of independent means. What that meant is they had won Kiyosaki's race, right? They got out of the rat race. They weren't working for money. The money worked for them. They had independent means. They didn't have to have a job. Their assets funded their lifestyle. So the goal of the independent speculator is to help independent-minded people, disciplined people who can think for themselves, to achieve that financial independence. So that's the overall idea. Bit of a sales pitch there. Sorry. We mentioned earlier free resources, so I'll just tell people there is the free weekly digest. If you're intrigued by what I'm saying here, if you sign up for that, I can't guarantee that you'll like anything I provide or agree with me or not, but I can guarantee that we will not spam you with a flood of daily advertisements. I hate that. You get one notification per week and then decide where to go from there.